Hi everyone, my name is Sam DeCourt, Wealth Advisor at Pi Funds, and welcome to our October monthly market update. Joining us today, Head of Fixed Income, Travis Murdoch, and Wealth Advisor, James Paterson. Hi James, hi Travis.
Hey Sam.
Hey Sam.
Travis, we'll start with you. Another good month in markets. Talk us through it.
Yeah, interesting few weeks in markets. We've definitely seen a bit of a pickup in volatility, but nothing you wouldn't expect after the sort of run-up we had since those April market lows. Even in a healthy bull market, the odd pullback is perfectly normal. And actually, markets have remained pretty resilient despite all the headline noise that's been about. From a fundamental standpoint, Q3 earnings kicked off in the US last week with the big banks. They all reported really strong earnings, and probably more importantly, they gave their outlooks on what they're seeing on the US consumer and the US economy, and that looked pretty positive. So that bodes pretty well for the rest of Q3 earnings season, and should be a tailwind for the equity markets.
Thank you, Travis. James, internally, we've been talking quite a lot recently about how when you have a really sustained run of performance, and Mike's alluded to this recently, we've had an incredible 6 months in investment markets, but also our funds. And some investors forget that markets also go down sometimes. And in fact, we've seen a bit of a pickup in the last couple of days and the last week or two of some worried clients kind of convinced we're due a pullback and what should we do? How do you deal with those conversations?
That's so right. And look, I think, Sam, you're absolutely right. It's important to acknowledge that we have really enjoyed a strong period for markets. And so a question like this, I think, is really natural and normal. And Mike has alluded to this in recent correspondence, and Travis just then earlier. Volatility is normal, and actually a pullback or a pause can actually be a really healthy thing. And I think that's the sort of the key point to mention, isn't it? Understanding that volatility in markets is normal, for me, is actually one of the most important and foundational aspects of what defines a successful investor over the long term. It's a really simple concept, right? Markets go up and they go down. But for those investors that don't understand that, they look to try to time the market from time to time. That's often when we see them getting themselves into a little bit of trouble or not necessarily generating the same returns as if you just stayed the course.
Yep, and we all know that investment professionals love quotes from famous investors, and I dug one out yesterday from a very famous American investor called Howard Marks. And to your point, James, he says, your ultimate success or failure as an investor will depend on your ability to ignore the worries of the world long enough to allow your investments to succeed.
Mm-hmm. Mm-hmm. I like it. It's a great quote, and look, I fully agree. And look, I think we've seen it, haven't we, across our own investor base over the years. And those clients that have the ability to stay the course, they ride out the highs and the lows of markets, generally will generate better longer-term returns or outcomes than those clients who try to time the market, they dip in and dip out. And for me, it's that whole understanding of the importance around being consistent, being disciplined, and staying calm throughout those different market cycles.
And James, what we see when markets are not going well is this tendency for people to want to make change. Is now, in fact, when markets are going very well, is this the time to make change or have a review?
Yeah, it's a really good question, isn't it? And look, there's a real tendency, I think, for investors to want to make change, particularly when markets are falling. It's that whole sense of, oh, I need to do something just for the sake of it because I don't like seeing my value drop. Now, that's probably not a strategy that we think is that sensible. We're living through a different period, right? The last 6 to 12 months have been extremely strong. So actually, you could argue that right now, it's probably an appropriate time just to check in and to make sure that your portfolio is still aligned with your investment goals, your objectives, your risk profile. Now, by doing that, look, you may not actually need to make any change, but actually, I think it's still an important thing to be considering at this point in time.
Yep, good point. Travis, over to you. So to the point, what's around the corner? How are you feeling about markets going forward?
We continue to think the fundamental backdrop for equity markets is looking pretty good. Companies continue to report strong earnings growth. We're seeing that already in these early days of the third quarter earnings season. Growth is holding up pretty well in most countries. In the US, it might even accelerate in the coming months from some of the fiscal stimulus that comes up front from the one big beautiful bill that was passed earlier in the year. The capex boom is very real, and it's ongoing, and it's large enough to underpin GDP growth. And on top of all of that, the Fed is still cutting interest rates into what appears to be a perfectly good economy. So yeah, we see plenty of tailwinds for equity markets heading into 2026.
All right. Thank you, Travis. Thank you, James. And thank you very much for watching. Quick reminder, we have our annual Investor Roadshow the last 2 weeks of November around the country. If you haven't seen details, you'd like to come along, please reach out to the team. We would love to see you there. Thank you very much.